Hello everyone. Tonight, first time since 2019, Monetary Policy Committee of the Bank of Ghana cuts its key lending rate to 13.5%. How significant is it and how soon will the impact be made?
3 months. If competition sets in, you will see the transmission rate here.
We'll hear more from banking consultant Anotu Echampa. Also coming up, Unilever Ghana PLC expects strong performance for the year following significant gains made in 2020 despite disruptions caused by COVID-19. We'll have a report from the company's annual general meeting. Plus, Managing Director of GTB Bank, Kofi Adumako, grants Joy Business his first major interview since he assumed office this year. He'll tell us about his vision for the bank.
Strategy is premised on 3 solid pillars: revenue growth and profitability. The other is to seek operational excellence, and then to invest in our people to develop talents.
Details of that and other stories coming up in this half hour of business news on Business Live. Do stay tuned. Welcome back. A big story tonight. The Monetary Policy Committee of the Bank of Ghana has cut its key lending rate to commercial banks by 100 basis points to 13.5%. The first time since November 2019. Now, according to the Governor of the Bank of Ghana, Dr. Ernest Addison, the move was influenced by pickup in economic activities and recovery towards pre-pandemic levels. The move is expected to impact on the cost of credit in the next 2 months and stimulate economic growth. Here's the governor addressing the press earlier today.
On the domestic front, economic activities have picked up strongly, evidenced by the high-frequency economic indicators. Consumer and business confidence softened, triggered by the new revenue measures and recent instability in power supply, which coincided with the survey period. These have served to dampen sentiments, but are viewed as temporary and should improve in the near term. Private sector credit growth still remains below pre-pandemic levels, but we expect banks to respond to the observed emergence of increased demand for loans to support the expected pickup in economic activity. The banking sector remains sound and profitable, with adequate levels of capital and liquidity to withstand moderate to severe shocks. The industry has witnessed sustained growth in deposits, total assets, profits, and shareholder funds. The COVID-19 policy and regulatory response measures have somewhat helped to mute the effect of the pandemic on corporates and households and are being maintained in the near term. There are signs that the execution of the budget for the first 4 months point to some improved revenue collections and expenditure containment to ensure real realignment to the consolidation path. The fiscal data shows that fiscal revenues have significantly outpaced developments a year ago, but slightly lags behind target. The gap in revenue performance vis-à-vis the budgeted target has been somewhat compensated for by expenditure containment measures. However, in the near term, the committee noted the risks in the fiscal outlook surrounding wage settlements, energy IPP payments, the potential for arrears buildup, the potential for scaled-up expenditures associated with COVID-19 and mass vaccination efforts, and the implementation of the Ghana Cares program, which would have to be carefully managed in a time-consistent manner to minimize any deviation from the path of fiscal consolidation. On growth outlook, the committee's view was that the projected growth in the extractive industries, the steady rollout of the vaccination program and recovery in industry and the services sectors should work their way in supporting a faster closure of the output gap in the medium term.
Governor of the Central Bank, Dr. Ernest Addison, there we have reaction from banking consultant Anotu Echampong to the Bank of Ghana's decision to cut the policy rate to 13.5%. He expects the impact of the reduction to be felt in the next few months.
We have a free market economy, which means competition, which is the invisible hand, will force these banks to accede to that reduction. Because now they are all stashed with money, looking for homes for those money. And if it's partly because interest rates are high, people are not coming. All you need is one of them to go out of line and offer a cheap loan, and you see that everybody will be trooping there, and then it will force the others to follow suit. So I think this time round, judging by the state of the economy, the transmission rate may be faster than we've seen in time past.
Within the next 2 months, you should expect something to happen?
Well, my prediction is that within 2 to 3 months, if competition sets in, you will see the transmission rate here.
And for you, should businesses be excited by this?
They should be overjoyed about this, because it's the reduction in interest rate, which is defined as the cost of money, the cost of using other people's money, is what drives businesses. Without money, you cannot manufacture. Without money, you cannot even buy and sell.
While away from the policy rate, Unilever Ghana PLC expects strong performance for the year following significant gains made in 2020 despite disruptions caused by COVID-19. The company made some strides last year to improve on its low performance in 2019. It will build on the achievement of 2020 to become more liquid. Correspondent Kwame Yanka has the rest of the story.
For many, 2020 could largely be described as a year where businesses had to bear the brunt of COVID-19 pandemic. Although a company like Unilever Ghana PLC was not insulated from the shocks of the pandemic, it has a different story to tell. As businesses were tanking within the period under review, the company saw a significant improvement over its 2019 performance. It ended 2020 with a 37% increase in revenue, from 333 million Ghana cedis in 2019 to 456 million Ghana cedis in 2020. Operating loss for the year was 22 million Ghana cedis, an improvement from same period in 2019 of 206 million Ghana cedis. Loss after tax in 2020 was 50 million Ghana cedis as against 160 million Ghana cedis loss the previous year. There was also a significant improvement in cash and cash equivalent balance as at end of year from a deficit of 53 million Ghana cedis in 2019 to a deficit of 0.9 million Ghana cedis in 2020. Unilever Ghana PLC believes there is more to achieve. George Osuansa is the managing director of the company.
I think the major highlights were the improvements that Unilever Ghana saw in 2020. We improved on our turnover, we improved on our profitability, and we improved on our cash flow. We still have a lot to do, but on the back of our 2019 challenges, I got a sense the shareholders were appreciative of the improvements we saw in 2020. And I believe in that if we continue on this trajectory, we will overcome the need to improve our profitability and to even make the company more liquid.
Meanwhile, George Osuansa says the company contributed in diverse ways in the fight against COVID-19, both in-house and at the national level.
Of course, not forgetting the fact that in doing that, we also had to make sure that our staff and everybody was safe from COVID. And we also joined up with the government and people of Ghana through our grants and our donations to support the effort in the country to keep Ghanaians safe from the COVID-19 virus. As is typical with annual general meetings, we also had to pass some resolutions. Approval of rotating directors, and also the conversation around approval of a resolution to separate our tea business.
Unilever's active involvement in the Ghana Recycling Initiative by private enterprises continued in 2020. The group collected 1,800 tons of plastic waste from the environment, apart from media campaigns and other measures in waste management. Kwame Yankesh reports for Joy Business.
And you're watching Business Live. Still to come, Managing Director of GTB Bank, Kofi Adumaku, grants Joy Business's first major interview since he assumed office this year. He will share with us his vision for the bank.
Strategy is premised on three solid pillars: revenue growth and profitability. The other is to seek operational excellence, and then to invest in our people to develop talents.
And we'll have more after this break.
On Money Lab today, we want to have discussion on investment returns. When do we say an investment return is too low or is too high? There are so many complaints from investors about being duped on an investment. So I'm going to talk about two things that we need to consider in order to know whether an investment return is too low or is too high. The first thing is inflation rate of the country. Anytime you are doing an investment and the returns that you are getting is below the inflation rate, then you need to know that that return on that particular investment is too low. What it means is that on maturity, your investments plus the returns will not be able to purchase what it would have purchased at the time that you are doing the investment. Secondly, you also need to look at what we call the risk-free rates, and this is normally the treasury bill rates. Anytime you are doing an investment and the investment return is so far away from the risk-free rate, then you need to know that you are taking on a lot of risk. I'm sure we all know the saying of the higher the returns, the higher the risk. So let's ensure that we consider these two factors anytime we are looking at any investment products. Join us for the next edition of Money Lab.
And you're still watching Business Live. Now, Managing Director of GCB Bank, Kofi Adumako, says the bank will concentrate its efforts on building private sector businesses through facilities and capacity building. He says no country should grow or could grow, leaving its private sector behind. In his first major interview since he assumed office, Kofi Adumako told Joy Businesses Odilia and Tiamwa government's initiatives at building the Ghanaian economy through industrialization is not left out.
Afri-Exim Bank, then here you are at GCB. How or what is the strategy that you're going to use, and of course from hindsight from other places that you have been, to really give GCB Bank the look that everybody had been expecting from when the bank just transitioned from Ghana Commercial Bank to GCB?
Very good, and thank you for this morning's conversation. You say from Afri-Exim Bank to GCB. Afri-Exim Bank maybe was the launching pad to get into this fantastic bank, GCB. But simply put, I'm sure you are aware, the industry, the banking industry and financial services industry is going through some challenging times. Save the challenges the industry encountered from the pandemic. We are seeing evolving regulation. We are seeing customer expectations change. The customers are demanding more, and rightly so. We are seeing macroeconomic environment globally and locally also changing, and disruption in technologies have also impacted the banking space. So banks have to think about how they're going to remain relevant into the future. And for us as GCB, we have made up our minds. We've come up with a strategy that will reposition us as the most dominant bank in Ghana. Our strategy is premised on three solid pillars. One is to grow revenue growth and profitability. The other is to seek operational excellence, and then to invest in our people, to develop talents. Okay, these are the three focused areas that our strategy is built on. But more importantly, as a bank, and GCB, you must know, is not just a bank. We're a nation builder. We're a catalyst to development in this country. If you look beyond our numbers, if you look at the performance of 2020 and you look beyond the financials, you will see the contribution we have made to this nation through socio-economic development. And we see ourselves as a catalyst to that. One of the key things we want to do, so we reposition ourselves as the most dominant bank in Ghana and deliver commitment and service and value to our customers, is to grow indigenous Ghanaian businesses. We need to spend time developing our private sector and our business community. We need to develop them not only by providing them with financing, but develop them capacity building and governance, etc. No country has developed significantly without the development of the private sector. And it is only banks like GCB that will and have the capacity to develop the Ghanaian private sector.
Do you have any special regime for this sector?
Yes, we do. We have a plan for this, and like I said, it includes financial and it includes capacity building. We are drawing on the bank's relationships internally and partnerships internally and also externally with international finance institutions.
Looking at, of course, the current environment, looking at the fact that COVID hit, one of the key things that has come to stay with us forever is innovation, is technology, is innovation and technology. general perception about GCB has not been a leader in innovation and, of course, a leader in technology. How is your leadership going to sort of like change this perception so that if people walk into a banking hall for GCB, they have an experience that will probably leave them spellbound?
The management, the staff, the board of GCB over the last couple of years have invested heavily in technology. They have developed innovation labs, and they have done quite a lot in terms of that. I share a different opinion, and I think our clients who use the bank services will probably realize that over the last few years, in terms of technology, GCB is transforming and getting more into the digital space. GCB is moving from a traditional bank into a more contemporary one, and I think that the investments the bank has made over the last couple of years, this digitization journey takes some time. I know where GCB has been coming from, but I think we're on the right track. I think we are well plugged into the journey. We have invested heavily in automating our front office. We invested heavily in our back office. We've tried to develop digital platforms so our customers can work from home. Our customers can access the bank and do their transactions from their areas of convenience. The COVID was a real test, and I'm happy to say the bank really excelled in terms of using our digital platforms. Okay, so I think it's a journey. I don't think we are there yet, but I think we're on the right track. Okay, I think with the right investment, the right strategy, the right direction, our customers should experience much better customer interaction with the bank. I think the focus right now for us is to make get our customers to enjoy the pleasure of working with GCB remotely and through digital platforms.
You spoke about how technical support for the private sector is critical. And then, of course, as part of your strategic thrust, you're also looking at how to support your internal customers, that your workers, to be really up to standard and up to scratch when it comes to delivery. What is the strategy?
Okay, the whole strategy about GCB is in transforming the bank into be a high-performing institution. And to be a high-performing institution, it's all about delivering on your mandate and delivering on performance. Okay, so the bank is skewed towards a high-performance managed institution. Our staff are aware. Our staff are involved in all of this. They are aware that there is a reward for high performance, okay? And we have evolved from a system that probably was not of that orientation. And now the new GCB, the new agenda with our staff is to make sure that our staff are rewarded for performance. More importantly is the whole value proposition. Okay, is the staff value proposition. What does GCB present? GCB wants to be a center of excellence where we have the best people working for GCB. So the way we recruit, the way we develop, the investment we make in our talent, the kind of succession planning we put in place, and the belief we make in our staff to understand.
That was very insightful, that interview with GCB Bank boss Kofi Adumako with Joy Business's Odilia Ntiamwa, ending Business Live tonight. Thanks for watching, everyone. There's more news on our website, myjoyonline.com/business. We are back same time tomorrow.